So basically, what consolidation is the market's just sort of in a indecision of which way it really wants to go. People are probably taking a lot of profit, or there's been a really large, fast move, and then it's just gone into consolidation until people can gather their thoughts, what they're going to do. The big hedge funds and all that sort of guys are still working out if they're going to continue or try and reverse the market. Now, consolidation is the stretch of time where the market is moving sideways within a range without any sense of direction. It's found on any time frame, can create tight consolidation of 20 to 40 pips, or it can be large range over several hundred pips when you're looking at like the weekly charts and monthly charts. To be considered a reliable consolidation, the market requires a minimum of 5 hours with a tight consolidation during peak trading hours. So, for instance, 12 a.m. New York to 12 p.m. and Sydney time is 4 p.m. to 4 a.m. Now, trading consolidation, several different approaches can be used depending on the width of the consolidation range. Tight consolidation is up to 40 pip range, so the low and the high is got to be under the 40 pips. Mid-size consolidation about 80 pips, and a large consolidation range when you're looking at probably daily charts, weekly charts, you're looking at 100 pips there. So it just depends on what style of trading you're doing. When the market is in consolidation, it will often break out in the direction of the previous trend. Upon a breakout, if the currency returns inside the initial range, then there's an increased risk of a whiplash taking place and the currency heading back in the opposite direction. The risk rules and workable stops can be a challenge when trading consolidation zones. But remember, only trade if your risk and money management rules are being adhered to. All right, here's a chart here. And you can see the market's really moved down nicely. Some profit taking happened. So people who are obviously up here have come down, start taking profit, and then the market's gone sideways. So there's no sense of direction now. A lot of the times it'll just continue back into the trend, so this could be coming back down again. But we need to have it for a period of 5 hours in a tight range. So if this is a 30-minute chart, we've got 1, 2, 3, 4, 4.5 hours here. If this is an hourly chart, well, we obviously got more than 5 hours. This is the GBP USD 60-minute chart, so easily in that range at the moment. So we need to work out a few things. We need to know that this market is clearly in a downtrend. We've hit a 618 extension on the pullback. So this is the 618 extension here. You're using your fibs from the top to the bottom. It's pulled back at a 382 and a 382 bounce, usually looking for a 618 extension. This is what it's done, gone just past it and pulled back. So now we're just holding the new level of the 382. So now we re-look at where we are, and we just draw the lines at the top and bottom of the consolidation. So the high in this case is 74.53, the low is 74.30, so we've got a 23 pip consolidation. Now what we need to do is find out where we're going to have our entries and stops on either side of when the market breaks out. So to the higher side, you can have 15 to 17 pips as an entry to the high side and 10 to 12 on the low side. Now, the reason why we have more on the high side than the low side is because when you're getting into the market long, you've got the spread as an extra going long, so you've got to take that spread into account. So it's 10 pips plus your spread, or to just make it easier, 15 pips to 17 pips. On the short side, we've already paid for the spread on the short side. It means we've just got to go a few pips past to get paid on that one. So this getting 12 pips entry on the short side is where you would place your entry on the short side. However, there's a 52 pip range between these two. So if you were going short at 74.18, your stop would be up at 74.70. 52 pips, then you got to look at your account and say, can I afford that? Is that really affordable in my trading account? So if not, you might have to pass on the trade, or the other side you could do is lower your exposure. In other words, if you're trading one full lot normally, to get back inside your risk rules, you might have to do half a lot, 5 mini lots, and that still will let you be able to put yourself in the trade, but not go over your money management risk rules.